My name is Nikhil, and the company which me and my friends will be talking about is Larsen and Toubro Limited. Larsen and Toubro Limited is an investment holding company which engages in technology, engineering, construction, manufacturing, and financial activities. It was first listed on the stock market in India in 1994. Its issue price was rupees 262 per share. It operates in over 50 countries worldwide. In this video, we will talk about the corporate actions undertaken by the company in the past 5 years.
Hello everyone, my name is Vijendra Kumar. Today I am going to talk about the dividend payment made by the Larsen and Toubro company. The members who are holding the Larsen and Toubro shares from before August got the dividend payment of 30 rupees per share, in which 6 rupees per share are the special dividend and 24 rupees per share are the final dividend. What do you mean by dividend payment? A dividend payment is a distribution of portion of company's earning to its shareholders. When a company generates profits, it can choose to reinvest those profits back into the business for growth or distribute them to the shareholders in the form of dividend. Dividends are typically paid out on a regular basis, such as quarterly, semi-annually, or annually, and usually given to the shareholders as a cash or additional stock of shares. Dividends are often seen as a way for companies to share their financial success with their investors and provide a return on investments beyond potential stock price appreciation. Companies that pay dividends are usually well established and financially stable. Dividend payment required a reliable stream of profits. Dividend payment can be an important factor for investor seekers for regular income for their investments, especially those who rely on their investment portfolios for retirement or other financial goals. However, not all companies pay dividends, especially those in the growth industries that may choose to reinvest all the profit back into the company to fund expansion and innovation. And it is important to note that dividend yield is affected by the both dividend payment and its stock price. If a company's dividend payment remains the same but its stock price increases, then the dividend yield will decrease, and vice versa. Similarly, if the dividend payment increases while the stock price remains the same, the dividend yield will increase. What do you mean by dividend yield? Dividend yield is a financial ratio that calculates the annual dividend income generated by an investment related to its current market price. It is expressed as a percentage. Dividend yield helps investors assess the income potential of an investment in a dividend paying stock. The formula for dividend yield is annual dividend per share divided by current stock price into 100. A higher dividend yield indicates a higher potential income from the investment. Investors often consider both dividend payment and dividend yield when evaluating potential investment. A higher dividend payment can provide greater income, while a higher dividend yield might suggest a more attractive income related to investment cost. However, it is essential to assess both aspects of the company's financial health and growth prospects and make conditions to make informed investment decisions. And there are some years when company has announced the bonus shares in the ratio of 1:2. Those years are 2017 and 2013. The dividend paid by the company to the shareholders has been constant for some years, but there is a growth in recent years. In the year of 2019, the dividend paid by the company is 18 rupees per share and continued till 2021. And in the year of 2022, the dividend paid out by the company is 22 rupees per share, and in 2023 it's grown to the 30 rupees per share, and the dividend yield is 0.89. Thank you.
Hello, this is Utsav and I am going to talk about Larsen and Toubro Limited company and one of its corporate action, that is bonus issue. Uh, Talking about bonus issue, a bonus issue is also known as a bonus share issue. Is a corporate action where a company issues additional shares to its existing shareholders free of charge. It is usually done to reward shareholders and increase liquidity in the stock. The company's total market capitalization remains same, but the number of outstanding shares increases. Shareholders receive additional shares in proportion to their existing holdings. This does not affect the ownership percentage or the value of the investment. Last time, Larsen and Toubro, an Indian multinational company, issued bonus shares in the ratio of 1:2 in 2017. This means that for every two existing shares, shareholders were given one additional shares as a bonus. Larsen and Toubro Limited issued bonus shares to reward its existing shareholders by distributing additional shares for free. This move aims to enhance shareholders' value and liquidity, while also reflecting the company's positive financial health and growth prospect. Uh, these shares were distributed for free, serving as a way to reward shareholders, boost liquidity, and indicate the company's strong financial position and potential for growth, while maintaining the overall value of their investment. Talking about the impact of this bonus share issue, the share price prior to the record date, that is 14 July 2017, was hovering around 1700 rupees, and after the record date it was reduced to 1100 rupees. If I talk about the history of bonus issue by Larsen and Toubro Limited company, uh, Larsen and Toubro Limited has given four bonuses since 28 September 2006. Uh, in 2006, the company had announced a bonus issue in 3 is to 2 ratio, meaning shareholders received 3 bonus shares for every 2 shares held. In 2007, another bonus issue was made in 1 is to 2 ratio. In 2009, L&T issued bonus shares in 1 is to 2 ratio, and in 2017, it was 1 is to 2 ratio, which I have already discussed.
The board of Larsen and Toubro Limited on 25 July 2023 approved a rupees 10,000 crore share buyback. So, what is share buyback? Share buyback is when a company buys back its own shares from shareholders. It is seen as a tax-efficient way to give cash back to investors. Share buyback reduces the number of shares available in the market and thereby increases the real value of the stock. Buyback provides investors with exit opportunities when stocks are undervalued or sparsely traded. There are two ways in which a company can execute buybacks: the tender offer and the open market offer. In a tender offer, the company makes an offer to buy back shares at a particular price. Here, the price is usually fixed at a premium, and investors having share of the company on record date can part with their shares by filling out respective forms over a given period. In an open market offer, investors don't get very excited. In the open market offer, everything is routed through stock exchange and price isn't fixed. This buyback offer is a tender offer. L&T plans to purchase 3.33 crores of its equity shares, representing 2.3% of the fully paid up shared capital at a maximum price of rupees 3,000 per share. If the buyback goes through, it will be the company's first ever buyback in 85 years. This is not the first time that L&T has proposed a buyback. Back in August 2018, the board has approved a buyback of up to rupees 9,000 crores. However, it was rejected by SEBI on grounds that post buyback the company would have had a debt to equity of more than 2. But this time around, L&T is prepared. The company's debt to equity stood at 1.06 times as of June 2023. This buyback offer of rupees 3,000 per share is at a premium of around 17% over its closing price as of 25 July 2023. How this corporate action impacted the share price of the company? The share price increased 3.3% from 2560.90 as of July 25 to 2646.25 the next day. There was a 85-point increase in the share price of the company. The buyback record date is set for 12 September 2023.
So my name is Pranav and I am going to talk about one of the corporate action that is acquisition about Larsen and Turbo Limited Company. So first of all, what is an acquisition? An acquisition occur when one company buys out another company's stock or asset shares. The acquiring or buying company becomes the owner of the company they purchased called target company. In order for acquisition to go through, the acquiring company must purchase at least 50% of the target company shares. If we're talking about the data of 2019, Larsen and Toubro made a significant acquisition by acquiring a majority stake company that is Mindtree, an Indian multinational IT service company. The company holds about a 61% stake in the company, which has a market value of $8.3 billion and has around 74% of L&T Infotech, which has a market capitalization of 13.6 billion. Talking about the details of the acquisition of Mindtree, the acquisition was initiated in March 2019 and conducted in June 2019. The acquisition was a combination of open market, purchase, and tender offer. If we're talking about the stake acquired, L&T acquired a 60.06% stake in Mindtree. If we're talking about the financial impact, the acquisition involved a subsequential financial investment by L&T to acquire the controlling stake in Mindtree. If we're talking about the rationally, the acquisition market L&T entry into the IT service sector, a move aimed at diversifying its business portfolio and leveraging the growth demand for technology service globally. If we're talking about the outcome of this, despite initial resistance from Mindtree's founder and management, the acquisition allowed L&T to become a major shareholder and influence the strategic direction of Mindtree. This acquisition was significant move for L&T as it expanded its operation into the IT service industry, complementing its existing capabilities in engineering, constructions, and other sectors. Thank you.
Hi, my name is Marsha Shaker. Let us get to know about the stock splitting. When we move, shall we other? Stock splitting does the division of existing share of a company's stock price to move it more affordable to the public. We want to invest but are not able to because of high stock price. This basically result in huge investment to the company, which in turn they could invest in different domains of the companies, which can lead in the further development of the company. Let us understand how the L&T did stock splitting is and how it benefited their businesses. L&T is the one of the leading company in the construction and manufacturing in the entire the world. L&T did not a total of 5 stock splits. Their recent stock split was on July 20th, 2017, July 13th in the ratio of 3:2. This means L&T decided to split their own price of the stock into 1.5 stocks. Here, the company increases its number of outstanding shares and there will be no change in the total market capitalism as the price of the each share got splitted, as well as this elected stock splitted lower to the price of single share, which made stock more affordable. A lower share price was a result of this split attracted more investors, increasing trading volume and liquidity in this stock. The management of L&T were able to keep their investors happy because of decreasing the share prices, and the company was able to invest more in their RD division, which means the turn increases their revenue in the long run.